All right.
I mean, yeah.
So anyway, Andre, you want to take the screen?
Yes, sure. Let
How
me.
have you been, my friend?
I'm been well, thank you. Working
Good.
as always. It makes us wealthy.
So Andre, before we get going with some analysis,
Of course.
I've talked to you a few times before. In fact, I think that's how you ended up here. Is what attracted you to harmonics? Did you go through other methodologies before you landed and kind of found this was
Well, not yeah,
or
not
did you
not
start with harmonics?
not all of them. I missed some, but I started to develop a process with the harmonic patterns. What I call a process is a process to trade based on the decent risk reward approach. Initially, this is a process that starts 2011, probably 2011, 2012, when I went unemployed. So I was working for a network security and network provider company. So as a supervisor. So then all the team got unemployed, and I joined TradingView. And as soon as I joined TradingView, I started to see a lot of people sharing those harmonic patterns, and I started to wonder what is that methodology about. So, and I started to develop that process there, basically because I think it's common for everyone. So we start to push some trades without the proper knowledge, and that happens to me also. I started to push some trades. Luckily for me, the trades went well for me. One day I wake up, I shorted coffee with a few bucks. I made a quite decent amount of money, and then and from that day I started to develop a process to learn, and because we have alerts everywhere to calling your attention for the most common mistakes the traders used to commit when they approach the market. So I initially I tried to avoid those common mistakes, trying to learn the most possible in order to avoid those same mistakes. But when you start to put your money at risk, things will start to change. And then I started to realize that it's the same process for everyone. We think we know the how to trade the markets. We think we have a decent strategy to trade, and things are not going in the direction that you expect. And that is a level where I think the most common traders will quit from this journey. So we will be confronted with a situation. Okay, if I keep doing this, I need to learn, or I will keep doing it wrong. I need to learn how to do it correctly. So if you are a persistent person, I believe you will be confronted with that situation, and you will try to learn even more. So at some point, on TradingView, I gain a lot of projection inside that platform.
So are you self-taught harmonic patterns just off TradingView? Or did you read any books?
No, I didn't read any books. I learned the ratios where those patterns tends to form, and then I develop a process by my own. To trade them. So we have a lot of references to trade harmonic patterns. Obviously, Scott Carney eventually is the one that most of the people.
Yeah, but he says he invented all of them.
Well, it's probably he was the one that makes the effort to learn those processes. But the patterns were there already. Actually, the Gartley pattern. There's a reason for a Gartley pattern. The Gartley pattern, it was not invented by Scott Carney. It was actually found by H.M. Gartley in 1935. So those patterns always been here. So if you go back in history, before Scott Carney existence.
Pre-Carney.
Those patterns are there, you know, and as
BC, before Carney.
Before exactly before Carney. But no, those ratios, those patterns tends to respect. Those ratios are presented not only inside the financial markets, as you know. I trade based on, or actually those patterns tends to form based on and supported by those Fibonacci ratios. So and we can see those ratios, the importance of those ratios in other elements in our universe, not only on Earth, but also on space, between planets, between the orbits, between planets. So we can find those ratios everywhere. So it's not uncommon to identify those patterns. The difficulty, in my point of view, or the hard thing to do, is to learn how to take advantage, or how to create, let's say, to create a strategy to support your trades based on the decent risk-reward approach. And if you repeat that process, I believe it's similar to any other methodology we learn to trade. If you trade Elliott, if you trade Harmonics, if you trade basic technical approach, if you trade anything you trade, you need a strategy to fight that the possibility.
You need money management skills.
Money
no
management, exactly. So I found the harmonics very useful in order to identify, as I said before multiple times here, in order to identify my targets, my limits, and adjust my position size accordingly to the amount of money or the percentage of money that I'm available to lose in that specific trade. And of course, I lose a lot of trades based on that. But when the trades comes on my direction, usually I recover a lot of the previous losses, because the risk reward ratio that I use, usually, if well managed, it allows me to expand and to expand my rewards. But let me say I think the main objective to trade those patterns is exactly the risk reward they offer. And if we pay attention to those specific Fibonacci ratios, and if you study those processes, at some point it will become familiar. It will not be so, let's say, I will not create any doubt if the pattern is there or not. So the pattern is there. What I want to do? Do I want to engage this pattern at this point? Do I need to wait? I need to search for another opportunity. And that is the most hard choice to do. Which pair should I trade at this point? Which pattern should I trigger? And that's the hard part.
I see this 4-hour chart that you have up on the S&P. Oh, it's a 1 hour.
This is a 1 hour. Yeah.
So if you want to go over it, that's fine. I think we're at a juncture where it might be good to look at some longer term daily stuff with what's happening in the dollar, what's happening in metals, and what's happening in risk. Yeah,
I just pushed this chart for SPX 500 because, as mentioned by Blake, we had these bearish. I call it the bat pattern because the market failed to retrace here to the golden Fibonacci retracement level. So based on the Fibonacci ratios here, I call it this bearish bat pattern at 88.6. The price has one first initial reaction and then a new higher high. New higher high, we have a clear divergence there, which has forced the price to land. Now, what I'm seeing at this point, and this is of course just one of the probabilities, is for the price to find some support or some pressure at this price zone. Note that we are already trading this previous next zone. This is a next zone for 4 hours, double bottom printed below. This is a technical double bottom that I shared before with our subscribers. So we are now threatening that next zone. So I will not be surprised to see the price bouncing from this price zone. But we have also a few points below the bullish shark pattern based on these false breakouts above. So we have this false breakout above the previous structure highs, and the market started to sink. So at this point, at 43.86, this is the golden Fibonacci of the last swing high. So I always like to pay attention to this Fibonacci level. Usually the price finds some pressure that I will not say the price will bounce and create new higher highs. I don't know if that will happen, but if that starts to happen, if we start to see the price trying to recover from this price zone, well, I will try to look at this into a higher degree, inverted edge and shoulders, and if that happens, we may see new higher highs very, very fast as soon the price starts to recover above these fractal resistance. But until there, I need to wait for the market to approach, of course, the resistance. So we need to confirm this initially as a shark pattern. If the price decides to bounce from this price level, it may form one inverted edge and shoulders, but it will take some time to develop.
Okay, so Andre, if we get down to that level that you see, see as a possible, support level, buy zone, do you have a trigger down there? Do you need a reversal candle, or do you just buy it when it's at that price?
No, usually I wait for a pin bar for a reaction, first reaction. Sometimes I miss that first reaction. The markets may offer me a second opportunity with a type 2 formation. We don't have time to explain that, but basically it's a retest of the completion point of the pattern. So if the price decides to bounce, and then if the price decides to approach again the completion point, kind of a double bottom or a retest of the lows again, that may offer me a type 2 formation of the shark pattern, and I can try to take advantage of that. But again, I need to wait for that to happen. Nothing is granted, of course. This is just a game in between commas of probabilities. Let's see if the price decides to react from.
I'd be curious to see what you have on the S&P or NASDAQ on a daily or weekly.
S&P, we have, Dale, but what can I say here? What can we say after all this sequence? I don't know. I don't know either, because every time we see, every time we see the price approaching the previous structure support levels, the market will start to bounce. I don't know what to do at this on those higher levels or those higher time frames for SPX 500. I can only tell you wait for the best option to buy and wait. Based on this, I can't suggest anything else. I will not suggest you to short and wait for the price to retest the 200 moving average. That can happen, but I don't have a decent risk reward approach at this point
because every break is held. Is that why?
Most of the time that's what's happening, and I don't believe it's the best option to try to short it. I prefer to go into a lower time frame and try to go long with
swing trade it.
Preference for SPX.
Scalp.
Yeah.
Okay.
Same for the DAX as an example. Bearish bat pattern for the DAX also on a lower time frame. We can go into 1 hour time frame, very similar to SPX 500. Note that the DAX is already approaching the golden Fibonacci and the 50% Fibonacci retracement level. So this is a natural pressure element or a pressure zone for the DAX, and the same will happen if the price decides to start to recover from this price zone, the head, eventually the right shoulder, and as soon the price breaks above the resistance, that should trigger the inverted edge and shoulder. Very similar to the previous process where the price prints a V-shaped recover multiple times, actually very similar to the price action on SPX 500. Now, we also know that, and we need to pay attention to that price structure that Blake calls the attention to. So basically, this is kind of a price behavior for a reversal because the price starts to form new lower lows and new lower highs. So if the price decides to keep printing that type of structure, probably we will have SPX 500 trading even lower these levels. But based, I always like to search for a specific pattern to trade. So that's the reason why I'm calling your attention for the potential shark pattern and the eventual.
How about when you and Blake were both long US dollar MEX last week? Now, for different technical reasons. I mean, I don't think he did it off a harmonic pattern. Are you still in the pattern in play?
No, because the market with the last week event when the market
was a winning trade. Yeah,
it was a winning trade, of course. If well managed, it was a break-even trade with the second portion of our initial position size, if I get the point. So I enter the market. As soon the market touches my first target level, let me put my Fibonacci tool right there. As soon the market touches the 38% Fibonacci level right there, we should adjust our stops. So that's always my suggestion with people trading with me. Adjust your stops to break even and start to partitioning your position, because we don't know if the market will go in your direction or not. What happens next is the market fills the 50% Fibonacci retracement, but fails to touch my second target at the golden fib. So if we are not fast enough to try to close our position, the next option is a break-even trade, because the market will approach your entry again. It probably during this process you will exit your trade. So answering your question, I'm not positioned anymore in this sequence, but this was the bullish, another bullish pattern projected at 1990, a huge sideways moving process, and then finally a violation of the structure, forcing and triggering this sequence.
Nice.
It was a nice pattern indeed. We have a few others. The Australian dollar, Australian dollar on a daily versus the New Zealand.
Okay.
We have this golden Fibonacci extension level also as a nice support, nice bounce from these levels. Weekly and daily fractals now adjusted to the most recent lows, 102.79. So we have targets positioned at 105.40. So, and I will not be surprised to see a few points higher to the golden Fibonacci extension. But I have targets for this sequence at 105.40, which is a 38% Fibonacci retracement of all the patterns. So I wait for that to happen for the Australian dollar. Another, you were talking about the gold, Dixie, and actually the metals in general. If we go into a weekly time frame, actually I shared this chart today with our subscribers at ForexAnalytix, and I shared before. Actually, let me try to share this also with our viewers, and let me try to show you this chart here. So this was a chart that I shared before. This is a chart from July 05, when the Dixie starts to approach this kind of, in my opinion, kind of a next zone for a technical double bottom printed below. So technical double bottom, usually I like to plot or to monitoring the close price of the structure. So I like to pay attention to the close price of the retest. Let's call it the second bottom. So if the price decides to close above the lower close of the first bottom, I will consider this as a potential technical double bottom, and specifically with that fast reaction from the support. So I will admit that a violation above this resistance should trigger the technical double bottom. So we are now threatening the violation of not only the most recent fractal resistance printed last week, but we are also threatening that next zone. Actually, the market spent last week threatening that next zone. So we are now in a position that I can say I will not be admired to see 96.16, which is the default projection for that technical double bottom being reached. So that will put the price basically at 50% Fibonacci retracement from the previous structure highs. So that being said, and as I said before, and at the same time, we have, if you want to see this for euro versus dollar, which is already trading very, very heavy below the monthly fractal supports. So this is also a technical double top that I shared before. I don't even know when I shared this one, but this one is older. From July, also from the same period, from the same time. Once the euro versus dollar starts to print this technical double bottom, I called our attention to the bottom of the structure, because as soon the price breaks these lows, which I believe the market is actually now trying to do that. I think that will trigger the pattern, and if that happens, I will not be surprised to see these markets. Let me show you also another sequence that can happen based on the most recent reactions here. So if we pushed our extension here, an extension of this very last swing high, then we have the pullback, a retest of the highs, a double bottom. And if I see the 127% Fibonacci, let's say 127, 141. So between these Fibonacci ratios, something between these ratios, that will print a bullish butterfly pattern. So that's one of the patterns that I like to trade. This is usually the market reacts inside this range. So I have already my range predefined before the market approaches these levels. So I can put a pending order if I need at 127% Fibonacci extension. I will target the 38% Fibonacci retracement level. So that suggests, after the formation of the pattern, a bounce towards the monthly fractal support, so the support level that we are now breaking. So if that bullish butterfly completes, we may see a retest of this fractal again, or this support again. So that makes some sense for me in terms of Fibonacci ratios and the default targets for that pattern. Okay. So I have already my reward, my potential reward for this setup. So if I want to, of course, ahead. Yeah, and I can use this amount of potential reward because I know if the market starts to react from here, the probability for the market to search for this 38% Fibonacci level will increase in my favor. So I can use those ratios or those, or in this case, the reward, and try to manage my limits. So I have a rule that says I never enter the market to lose more than what I expect to lose. So if I'm expecting to gain these amounts of moves if I'm expecting this move, I can create a 1-2 risk reward approach to try to trade this process.
Andre, do you ever help someone that has an interest in our community? Gravitates towards your work and Harmonics, where you, in a way, kind of mentor them?
From our community, from ForexAnalytix? No, never. And I think there's a reason for that, because with the content that we provided in our platform, even if I miss something, or even if Blake misses something, because I think which will be in edit, but if I miss something, we have probably the team will cover, even with a different methodology. All the team will cover that same perspective, or that same price level that you want to call your attention to, So, and for that particular reason, I believe people inside our community don't feel the need to ask for let's say for mentoring. Actually, we have a lot of experienced traders, and most of them much more experienced than myself. So that being said, I don't think it makes sense from our community. I have a lot of people asking for mentoring, which I'm not providing that kind of service at this point.
All right. Well, then
I had before.
We have a request for a gold chart. Why don't we wrap it up with gold?
Okay. This is a weekly chart for gold, and this is, of course, pure speculation. I don't know what will happen, but this is a symmetrical projection for gold on a weekly chart. The symmetrical projection will put the price trading the 200 moving average again.
Wow.
So this is just pure speculation. Again, I don't know what will happen. Let me remove this symmetrical projection from here, and let's talk about the ratios that we have here, because the ratios that we have here may help me to project patterns below. And the pattern that I'm projecting is the crab pattern extended at the golden fib. So this is 1528. This is a very deep fall for gold. Of course, if that happens, we may see the Dixie giving sequence to that
96.
Exactly, 96.16. So I will not be surprised to see that. Let's say silver is even, I think silver, it's even heavier than gold at this point, I think, unless it starts to find some.
Well, if gold's going to 1500, where would
Silver-
silver go to?
Silver's, I don't think 10. Let's say, well,
19.
we have 19 probably. The golden, if that happens, the golden Fibonacci will be my main Fibonacci level. So previous structure resistance. That's we have also 19. We have the 200 moving average pointing to 1907. So that will not be something similar to that. We have also, if that happens, and of course I need to see the price approaching these levels. 127 again.
Yeah, sometimes it's not the price, it's how it gets there.
How it gets there, exactly. And I need to wait for that to happen. So there's a lot of options. One of them is a butterfly pattern, actually at that same price zone at 1958. So that's also a bullish butterfly pattern there, pointing to the 200 moving average. So I will not be surprised to see that. On a lower time frame, I prefer to stay a bit away from this process. We have these minor, I have projected this crab pattern at right below the support at 2135. If that happens, if the price decides to violate these structure supports, the weekly, I believe the market may sink a little bit. And if that happens, it may find it needs to find some support at some point. Eventually the golden Fibonacci of the last swing high. So this is a Fibonacci extension of the very last swing high projected below. So that's usually the market will find some pressure there. Not sure if it will be enough to produce the expected movement. So if that pattern forms below, we will expect something like a 38% Fibonacci again. So a retest of the supports if that happens. So, but this is kind of a minor event for gold if that happens.
Well, thank you, Andre. Live from Lisbon, Lisbon,
from Porto,
filled with wisdom, Andre Cardoso.
Yeah,
you know,
Dale. I'm from Oporto. Lisbon are our rivals. Okay, don't.
Okay, all right.
I'm joking.
Live from Portugal.
From Oporto, we are from the north. They are from the south. Then. They are the district, the capital district. We are the second capital district in our country. Okay. The second
I'm sorry.
No problem. I'm joking.
In the
of course.
Wrong part of the country.
No, I have been working there. I actually enjoy very much Lisbon. It's a very, very nice city.
Well, people are saying they really enjoyed.
Oh, thank you very much.
We'll have to do this a little more frequently. Listen, guys, if you like Andre, and you're right, he is an artist with insights of technical situations in every instrument that he covers. So, if you want to see his work at the click of the mouse, take advantage of the promo that we have going for the next week or so.
Yeah, you have updates regularly, so you have constant advanced patterns being formed. So we just pay attention to those notifications, and if you have any doubts, any questions to ask, so please do that. You have my email address there, or I have a contact form for sure. So you have my Twitter also. So just contact me. I will have all the pleasure to give my 2 cents or to give my opinion.
And we learned a little history about there was actually a guy named Gartley
in
the 30s and before Carney.
Before Carney.
And then we have Andre Cardoso, A.C., after Carney.
After Carney.
AC. All right. So
Thank you very
I
much.
really love your work, Andre, and
Thank you, Dale.
respect your work.
We
And
are
I've seen
a
you go
very
through.
great team.
Yeah. So thanks
Very
so
great
much
team.
for
Thank you too.
dropping in, stepping up, next man up.
No
Had a
problem.
cancellation, and I'm glad we did because
Okay, no
I
problem
learned
at
some
all.
things. Every time you present, I learn from you.
Thank you very much. I learn every day. Yeah.
Okay.
It's a good process.
I've learned that you don't live in Lisbon.
I don't live in Lisbon.
All right.
For sure.
Thank you. Thank you,
Thank you
Andre.
very much. Thank you all for being here.
Yeah, listen, everyone, have a great turnaround Tuesday. You could join the team in 12 minutes for Morning Edge. And if you want an edge 24 hours a day, you take advantage of the promo. And anytime, 2 in the morning, 11 at night, you can always go and check out and see what the guys are thinking about everything. So remember, don't just count your pips, count your blessings. We'll see you tomorrow. Adios. You're very welcome, Sinatra, Jatine, Monica, everyone. Yes. Adios. See you, Simon, Khalid. Good hunting. Love you too, Monica and Laura.